Hey guys, in this video, I'm going to be explaining a couple programs that allow you to get into a house you want now without necessarily qualifying for a traditional mortgage right off the bat. I'm going to share my screen with you. All right. So, Divvy Homes and Home Partners of America. Some of you may have heard of these companies, some of you may have not. In this video, I'm going to explain to you what the differences are, what the benefits are of each, and how you can start taking action to make these a possibility for you. So both of these programs are a rent-to-own program. Now, many of you may have heard of a rent-to-own program. It's a very cool program that allows you to basically rent a home from this company that will buy a home that you want that's listed on the open market. They will pay cash for that home, and you will work out a deal with them to rent it back for 3 to 5 years, and then eventually buy that home or end up walking away from that home depending on what you want to do. So it's a very cool program for people that are looking for a home now but don't quite qualify, but still want to get into a home that they see themselves living in for 5 to 10 years. That's what I highly recommend. These programs are for people that see themselves living in a home for the next 5 to 10 years. This isn't a temporary thing. It doesn't really financially make sense if that's the way you're going to work it. So jumping into this, Home Partners versus Divvy Homes. I'm Spencer Herman. I'm with Remax Results, and I'm going to jump right into things. So qualification requirements for these are pretty similar. There are a couple different stipulations that kind of make a big difference for someone that's looking to buy a home, because whatever your future outlook is on buying that home really is what really determines which program fits your lifestyle the best. So both programs, you need a 580 credit score or higher to qualify, which is pretty doable, pretty reasonable. And they both require $40,000 or more annual income. And these can be, this threshold can be met from not only yourself, but another applicant that you want to live with. So maybe your wife or your husband you see yourself living with, they can also apply, and you can basically get a higher buying power, get more buying power in the market by having another person added onto that application. So if you only make 20,000 and your partner makes 20,000, well, you qualify. Both of you guys will qualify. Your budget won't be the greatest, but you will qualify. If you each make 40,000 and you're both on it, now your threshold is 80,000 a year. You're going to be able to qualify for a lot more buying power in a house. You might get up into that high 200 range or 300 range to be able to buy a house. So those are the same. With Divvy, you need to be employed for at least 6 months at a time. For Home Partners, you just need to show proof of income, 2 most recent pay stubs. Both, you can't have any bankruptcies. They don't want to see bankruptcies in the last 12 months. One thing with Divvy, debt to income ratio needs to be lower than 50%, right? So if you're making $40,000 a year, you can't have more than $20,000 in debt to be able to qualify for this program. Home Partners, they do a background check. You cannot have any criminal history. That is a no-go. All right, benefits of each, right? They both allow you to live in a house you can afford now while building up your credit and your financial history while living in that home. You can choose any house that's on the open market that fits within your budget, and the requirements are obviously much easier to qualify than a traditional mortgage. Here's kind of where things get different. So with Divvy, you actually get a rent equity. So a portion of your rent payments every month go towards a rent equity and get saved into an escrow account for you. Usually we're seeing about 10 to 15% of your monthly payment gets saved right now. So if you have a $2,000 a month rent payment, around $200 to $300 will get saved in an escrow account for you. And that will then be available for you to use later when you go to buy the house for your down payment and closing costs. Now, well, I'll get into that in a second. But, okay, so Home Partners, if you walk away from the home and the home is not for you, you get your deposit back, okay? Now, with Divvy, you do need to put a 1 to 2% down payment down on the home. And if you end up walking away from that home, then that down payment gets forfeited to Divvy. Now, with Home Partners, all you have to do is put 2 months rent down for your down deposit. And if you walk away from the home, that gets refunded to you. If you buy the home, that still gets refunded to you, and you get to use that for your down payment and closing costs. I'm gonna get to that on the next slide in a second. A couple things. Divvy does not have a application fee. Home Partners has a $99 application fee. A couple things to note there. Both programs do not affect your credit to apply. Things to know, okay? This is where I was kind of getting into things on the last slide, but you can buy the home at any time during your lease. With Divvy, it's up to 3 years to buy the home back. With Home Partners, it's up to 5, okay? So both of them, when you buy a house, say you buy it for $100,000, today, you will not be paying $100,000 to buy it back next year. You will be paying the appreciated market rate, which is 3 to 3.5%. So next year, if you buy a house for $100,000, you'll be paying 103 to 103.5 thousand to buy that home. Cool thing with this is Divvy and Home Partners, if anything breaks in the home, they're responsible as your landlord. They own the home. You're the tenant still in the situation. Like I said, you have up to 3 years to buy the home back from Divvy, 5 for Home Partners, and I would say you need to plan for at least 30 to 60 days move-in from the time we get an accepted offer. It is not a short process. It's not a rental. It is not available next week and you get to move in next week. We're actually going through the process of buying the home for you. We're doing all the inspections, we're renegotiating, and we're going back to the closing table and setting that closing date. So it does take a little bit of time. Things to know, okay, I've covered some of these already, but 1 to 2% down payment is needed for Divvy, and 2 months rent is needed for Home Partners, okay? So a couple things I want to note. The 2% down will be due as soon as we get an accepted offer, okay? $500 earnest money, right below that bullet there, will be due when we submit an offer, okay? So that's a couple things to note there. That's going to end up being 1% earnest money for Home Partners. So $100,000 house, you're going to need $1,000 earnest money. And that 2 months down payment will be due upon an accepted offer. With Divvy, as soon as we're a week away from closing, you need to pay your first month's rent, right? So this is where things get a little tricky. Some people get confused, but 1 to 2% down payment is needed upon an accepted offer. The $500 earnest money is due when we make an offer, and that'll be refunded if we don't get the accepted offer, or you can leave it in the account to then keep making offers with. But that will go towards your down payment. So if your down payment's $5,000 and you put that $500 earnest money, you will only need to come to the table with $4,500 for that down payment. Now, one thing to note is a week before or 10 days before we close, you need to pay your first month's rent. So this can kind of be a lot of money at once for a lot of people. I just want to make you aware of that. Divvy will buy up to $400,000 in Minnesota, and Home Partners will now buy up to $500,000 in Minnesota if you qualify for that much. So I hope that answers your questions. If it does not, please reach back out to me and I will get those further questions answered for you. But here's what you should do next, right? First of all, make sure you meet all the requirements to make sure that it's even a possibility for you to do. Obviously, you need to decide which program fits your needs the most and where you're looking to go with things. I would say if you see yourself living in a home for 5 to 10 years, Divvy is a great option. If you see yourself maybe not wanting to live there after you live there for a couple years, Home Partner might be your better option because you're not obligated to lose your down payment when you leave that home. You get that money back. But Divvy does have a rent equity for you as you're renting. So each has its benefits. You just need to weigh them out and decide which one's yours. Reach out to me with any further questions. Ask for the link to apply. Depending on which one you think fits you the most, we have to take a little bit different steps for that. But ask me for the link to apply. We'll get you going. Then we'll get you pre-approved through that application. And once you get pre-approved, that's basically going to be them pulling your credit. Remember, it's a soft pull, no harm on your credit. That's how you're going to get pre-approved. To get fully approved, you need to submit your income information. Then once you do that, you'll figure out your budget. You'll get assigned an agent for each of them. I will be your real estate agent, but you'll have a Divvy agent and a Home Partners of America agent so that we can communicate together. And then once you get fully approved and get your budget and all that, what we'll do is schedule a first-time home buyer consultation. I'll get to know you, get to know your needs more, figure out everything that you're looking for, discuss how the process works, what to expect, and also get you set up on a home search so you're not missing a beat in the market. And then once we're doing that, really, the fun begins. We start looking at homes and we start making offers, and things become really cool. So Reach out to me with any further questions, you guys. That is really what I had for you today. Let me see if I can get this figured out. Well, doesn't look like I can, but that is all I have for you guys today. So reach out to me with any questions. I hope you enjoyed this. I hope you got a lot of information, and God bless.